Hello and welcome to this special show on GST. There's just one more day left to go for the historic tax regime to kick in, and there are lots of questions still about what will happen when it comes to filing returns, when it comes to claiming tax credit. Lots of questions coming in. On this show, we will try to answer some of those questions. You can call us on the numbers flashing on your screen, or even send us an email at askaboutGST@ndtv.com, and we'll have a guest joining us to help answer all your queries. Now, NDTV's Vikram Chandra caught up with the Revenue Secretary Hasmukh Adhya and spoke to him about the anti-profiteering clause in the GST. The government has made it mandatory for manufacturers to pass on the benefit of lower taxes to the customers, and there could be penalties and loss of registration if this is not complied with. Listen in.
You have, of course, put in that anti-profiteering clause, which some people were concerned about. Is it going to be misused? Is that essentially to ensure that it will be passed on? And some people are also scared that they could be making genuine mistakes in the early stages.
No, mistakes are always, mistakes can be taken care of, but anti-profiteering is a much larger issue. We are not going to use it for every small shopkeeper or retailer or wholesaler. It is only to be used in exceptional cases where the big companies, and they have a mass production of items, and their rate fixation is done in such a way that the benefit is not passed down. Then only we may have to get into it. Our attempt would be, number one, the competition in the market should itself take care of that. Number two, we'll try to engage with them also and tell them, why don't you do that? Why do we have to use a weapon of anti-profiteering at all?
Let's welcome in our guest who will help answer all your queries. We are joined in our studio by Bipin Sapra. He's indirect tax partner at Ernst & Young India. Welcome to our show, Bipin. We have a query coming in the form of an email from Mohan Krishnan. Now, his question is about the garments business that he's in. He's asking, is GST applicable for transfer of semi-finished products, his garments in his case, from one branch to another in the same company for further processing, though the branches are in different states? So, is he liable to pay GST for the transfer from one state to the other?
So, the way GST works is that each branch is in a separate state, is a separate registration, and is as good as treated as a separate entity.
Okay.
If the goods are being transferred, like in a stock transfer, then there would be an IGST applicable, which the credit would be available. But if it is going for further processing and is liable to come back, then it can be treated like a job work, and there are certain exemptions available which he can claim. So, it is a little fact specific, but if it is going for the job work, further processing, there are exemptions available where you do not have to pay the tax, but the goods then have to come back and follow certain rules. But otherwise, there will be if it is a stock transfer of goods, even within the same company, but across states, there would be a liability.
All right. So, that's the question answer, that you can take it as job work as well. We have with us our first query coming in from Bangalore on the phone. We have Gilbert Pinto joining us on the phone line. Gilbert, good afternoon. Good evening. What's your question?
My question is, I am a small-time service provider with a turnover of about 12 lakhs. In April, I migrated to GST.
Okay. What's your question?
GST, thinking that the exemption limit was still 10 lakhs. Now it is 20 lakhs. What happens to my migration?
Okay.
Yeah,
can I answer?
Yeah. So, what happens is that you would be exempted in the GST regime, but there is a mandate that if you have a registration today, you will be automatically migrated to the GST regime.
Okay.
You can go ahead and surrender that registration, and that should suffice as long as your turnover is below 20 lakhs.
All right. So, he can surrender his registration because his turnover is less than 20 lakh threshold that exists for GST to kick in. We have another very interesting question on online sales. One of our viewers has written in saying, my online website has overseas clients. We receive payments in dollars. Do I pay GST at 18%, which is the service tax rate, or are exports exempt from GST? Can we go for the composite levy? What are the pros and cons?
So, has he specified its goods or services?
He has services. His is an advertising firm where he is giving advertising services to global clients, and he is receiving payments in dollars. So, it's actually, for him, it's an export or service.
Yeah. So, exports, there is no liability of GST, and he can claim the benefit of GST. What is there today in service tax would continue in the GST regime as well. Compounding is not allowed for the service players. It's only for goods.
Only for goods.
Yeah.
So, he will have to pay GST at the rate of 18%.
No, because it's an export, he'll have to. He can take the benefit of export.
Okay.
But if it's for his local clients, he'll have to pay GST.
All right. We have with us our next caller. Kamal Banerjee is calling us from Kolkata. Kamal, good evening. What is your question?
And the question is, on the motor car insurance, will it go up due to GST from 1st August?
All right. I think the answer is quite straightforward there.
Yeah, so what will happen is that the rate of GST is going to be 18% as compared to a 15% today. So it may go up, but if the company is willing to pass on any benefit, then the cost may reduce.
Right. We've received an email now from Iris asking, will there be a change in income tax return filing procedure post GST? I don't think it's impacted.
We haven't heard of that at all.
Right. So we are getting a lot of queries on claiming tax credit as well, especially when the product is coming from another state. So, the timelines set up for, the GSTR1, GSTR2, GSTR3. So, for the first 2 months, there is, only one return that has to be filed. So, for if I'm selling products, do I have to mention where I've sourced it from and, say that it's coming from another state?
So, for the first, and the query is limited to the first 2 months?
First 2 months, yes.
Yeah. So, see, the point is you'll have to do more of a manual reconciliation and creation of a Excel sheet or a register where you can keep those records, and it doesn't matter where it is coming from. The admissibility of credit is immaterial of that. So, they will be able to get credit from wherever they are sourcing. The type of tax which is paid on the input supply will determine what type of credit you can take. So, if it's CGST, you can take it for CGST or IGST, and SGST, you can take it for SGST or IGST.
Right. We have another caller. Prashant Kumar is joining us from Odisha. Good evening, Prashant. What's your question?
Actually, ma'am, my question is, we purchased a building, okay, ma'am? We purchased a building and we have given advance payment for that building.
Okay.
We will pay the second payment. So, when the GST will be rolled out, okay, ma'am?
Yeah.
When the GST will be rolled out, how much tax will be implemented so that we have to pay that amount?
Right. Bipin, we're getting a lot of queries from people who have paid for houses and, they've made few installments and some amount is outstanding. So, when they pay these remaining installments, what is the tax incidence here? Is it different? Does it change from what was happening earlier?
Yeah, the tax incidence changes in case of the pending payments. So, earlier it was there was a 70% abatement on a 15%. So, the effective rate was 4.5%, plus there was some VAT depending upon which state you were in. Now, it is a 12% tax. So, the rate has definitely gone up, but a lot of credits are now available which were not available earlier. Hence, what should actually happen is a renegotiation or a change in the pricing of the product, so that or the house which you have taken for the remaining period, so that the benefit which has come in can be passed on.
All right, we have Mr. CPK Raman joining us from Chennai as well. Mr. Raman, good evening. What's your question?
Good evening. The question is, one of the callers has asked that anticipating 10,000 as the limit, 10 lakhs is the limit, he has already registered his GST, and now he is telling this, since it has become 20 lakhs, since his turnover is only 15 lakhs, you have told him to that if required he can exit. But my question is, some of the panelists are telling you continue because the product is going from a registered person to a non-registered person. They may not get encouraged to transfer the goods. So in which case, what he has to do? Since he has registered, he can continue.
So the answer is you have the option of paying tax from the first instance itself. So even see this benefit is not compulsory. You can opt to pay for your tax from first instance and keep the registration so that the person who's receiving the goods or services can claim the credits.
No, but is there any disadvantage if I do not register for GST and my threshold is less than 20 lakhs? But when I go to sell my products, could I face any discrimination from prospective buyers saying, oh, you're not registered in GST, it affects my compliance, my ratings? Will there be any discrimination?
Yes. The discrimination is, and some of it has been taken care by the government, but what has happened is that if you are buying from an unregistered dealer, if a corporate is buying from an unregistered dealer, then the liability shifts to the corporate to pay the tax. So even if the turnover is below 20 lakhs and if a corporate is buying from you, then the corporate will have to pay that tax. So the compliance shifts from you to the corporate, which the corporate would want to avoid as far as possible.